Why are you launching this right now, and especially in Nairobi?
Thanks for having me here today. We launched a $2 billion investment fund today, targeted towards SMEs in the agribusiness area in East Africa, mainly because of the potential we've identified. There has been a lot of growth in demand due to population growth, and particularly growth in the urban population, which is demanding a lot more processed food. And that is what is driving the industrialization of agriculture in the region.
I'm sure you have done your due diligence and before coming up with something like this. What kind of opportunities do you see in the region?
The main opportunities are mainly in the grain sector, the dairy sector, horticulture, and non-food items like sisal and cotton as well, so as risky as it may be.
What are you offering specifically for investments?
What we offer is patient capital. We offer capital that is tailored to the needs of the business. And we also participate in the growth of the business, either through instilling best practices in governance. And we also offer business developmental support or business support through our technical assistance facility. And through our wide network in the region, because we've been in this business since 2006, we help them create linkages with other businesses out there that are maybe in demand of their products.
What is the average size of the capital you're giving these investments?
Our investment size range between $300,000 to $2.5 million per investment, but the average deal size will be anywhere between $1 million to $1.5 million.
What kind of companies are these? Because I'm trying to think from the perspective of somebody who's looking for investments and they're in the agriculture business value chain. How do I know if I qualify?
Well, we have our broad criteria, because we target SMEs. We try not to invest in businesses that maybe have a turnover that is higher than $10 million, or an asset base which is, again, higher than $5–7 million. But what we're in search of is good businesses, businesses with potential, businesses with a growth plan. And that is from early stage businesses to businesses that are almost mature and they're looking for additional capital to go to the next level.
What kind of impact are you foreseeing this having in the SME space in agribusiness?
Well, like most investments in agriculture in the region, there's a lot of multiplier benefits, because agriculture touches on millions and millions of livelihood. You know, in our region here in East Africa, about 70% of the population are employed by agriculture-related businesses. So we generate a lot of impact through that, through employment. But our investment funds as well, besides appraising a business for its financial returns, we also appraise them for their social impact return. Therefore, we look for businesses that have direct interface with smallholder farmers and with potential of having a positive impact in the rural communities.
What is Pearl Capital's role in growing the venture capital space, especially in agribusiness? Because there's not too many people in that area where you play in.
Yes. Well, yes, you're right. There are not so many people in this area, mainly because of the perceived risk associated with agriculture. But at the end of the day, you know, people have to eat. And as I mentioned before, you know, with the growth of spending power amongst the middle class income earners in the region, we see a lot of potential, and that in a way de-risks agriculture investment. We want to address what we call the missing middle, you know, the flexible capital targeted towards SMEs, you know. The only alternative they probably have are banks, and sometimes for fast-growing business, debt can only take you so far.
Everybody in the venture capital space talks about this missing middle, which is all nice and dandy, but do you have companies in Kenya and Uganda and Tanzania that have the capacity to take $3 million and use it appropriately?
Yes, yes, yes. You know, as I mentioned before, we've been in this business since 2006, and so far we've invested in 20 companies.
Right.
We have exited in about 8 of them. So we know the potential, we have the experience, we understand the terrain, and there are businesses, actually SMEs, who will even take up to $8 million. So it's only a matter of understanding the sector and understanding that you're getting into a relationship with these businesses. Therefore, you need to tailor your approach to them, because sometimes they're a bit hesitant to invite outsiders as shareholders.
So the success stories across the region do exist, but at what point do you normally exit these companies, the SMEs?
Our average hold period is about 6 years, but we want to our investment period to be between 5 to 8 years. And after that, we exit through normally selling shares back to their original shareholders or source for trade buyers. And some of our larger businesses down the line, we would like to list them in the stock exchange.
And you talk about transparency, corporate governance, and ensuring accountability and financial reporting. You've seen this to be representative across the businesses you invest in?
Well, yes, but it's still a challenge. That is one of the challenges we encounter, because most of the businesses we invest in are family businesses, and they are not used to a lot of disclosure that we require. Therefore, it's something that we have to walk them through, encourage them that it's in the interest of the business. If the business has to, you know, have any chances of continuity past the first generation owners. So we try to instill best governance practices, you know, integrity, you know, disclosure as much as possible.
Right. Wanjohi Ndagu from Pearl Capital with us in Nairobi. Asante sana. It's nice speaking with you.